I'm going to start by assuming no knowledge and talking about what a sukuk is. As you know, the shorthand description of a sukuk is an Islamic bond, but that's not quite right. A bond is normally a piece of paper, which is an IOU. It's an obligation where I say, I, Farmida B, promise to pay you, Jibril, £100 million on the 20th of November 2014 with interest every 6 months at a rate that we're going to agree. And so that's a debt obligation. A sukuk is different because what it does is represent a share in the actual property that is represented by the sukuk. So AOFI, which is the auditing and accounting organization for Islamic financial institutions, which is based in Bahrain, it's effectively a voluntary body. It has no external standing, but I think it has become increasingly important. And in addition to producing auditing standards, it produces Sharia standards. Their definition of a sukuk is the one that's now widely used in the market, and it's the one that's set out in the slide. And it's a certificate of equal value which represents undivided shares in the ownership of tangible assets. And it's this concept of a direct proprietary interest that is causing the French so many problems at the moment. You may have heard that the French government is trying to introduce a sukuk law, which has just been thrown out by a constitutional court on the ground that it wasn't introduced properly. It was added on to another piece of legislation. But because France has a civil law system which doesn't recognize or hasn't traditionally recognized the concept of trust, trying to create a direct proprietary link between the holder of the sukuk and the underlying asset in the absence of a trust arrangement has always been extremely difficult for them. From an English law perspective, it's very easy. I declare a trust, and what I'm saying is I now hold my interest in this sukuk for you because you've given me the money, and you have a direct interest that's enforceable as a result. So that's the definition. It's not a debt instrument. It's something that gives you a direct proprietary interest in the underlying asset. The next thing is, it goes to, is it a debt security or an unregulated collective investment scheme? A collective investment scheme is usually a fund or a pool where each of us contributes some money, and that pool itself goes out and invests in a product. And our analysis has always been that sukuk really is, from an English law perspective, an unregulated collective investment scheme. And for a long time, the Financial Services Authority refused to engage with that. They have now accepted that sukuk are unregulated collective investment schemes, that they should not be. And there is some secondary legislation going through at the moment where, as a matter of legislation, sukuk will be treated like bonds, like debt instruments. But that is effectively changing the law. And then the issue that's becoming, I think, crucial now is, are sukuk asset-backed or asset-based? If we have time, I'll talk briefly about the sukuk in the market that have defaulted or that are in trouble. And my view, I was talking to a journalist this morning, is the prospectuses, the documents are absolutely clear that almost every sukuk in the market is asset-based. It's not asset-backed. I'll describe an asset-backed deal to you when we go on. And by that, what I mean is there is an asset that underlies the sukuk, but when things go wrong, your right to that asset is transferred by a contractual arrangement in the document to typically a purchase undertaking. And so what you're left with is a contractual right pursuant to that purchase undertaking. You don't have a right to the asset. And on a well-known transaction that some of you are aware of, the Saudi Saad Sukuk, it is interesting that some of the extremely sophisticated investors who are Sukuk holders in that transaction don't really understand whether they have a right to the underlying asset or not. In most cases, they do not have a direct right to the asset when things go wrong. While things are going right, they do, but contractually they've given it up. So most sukuk in the market are asset-based and not asset-backed. I think the growth of Sukuk over the last 4 years, from about 2003, 2004 onwards, has been one of the biggest changes in the capital markets. There are about 100 billion of Sukuk outstanding now, and as I've said, most of them are asset-based. They represent ownership of an underlying pool of assets, and in an insolvency or a default situation, your recourse is to the purchase undertaking. It's like a guarantee. I'll describe it when we move on to a diagram of a structure. And the fact that your recourse is to the contractual claim contained in the purchase undertaking is reflected not just in the rating that's given to the Sukuk, which is based on the rating of the provider of the purchase undertaking, but that's also how the stock exchanges treat the Sukuk. They're treated like guaranteed notes where the guarantor is the entity that has provided you with a purchase undertaking. There are many ways, many Islamic structures that can underlie a Sukuk, but the three most common are ijara. And since the AOFI statement that some of you may be aware of last February about fixed price purchase undertakings, ijara now heavily dominate the market, but also traditionally musharaka and mudarabas. And ijara is a lease. I buy a property and then I lease it back, and it's the rentals from that lease which generate the returns that are paid to Sukuk holders. A musharaka is a joint venture where one party contributes physical assets and the other contributes cash, and the physical assets have to be at least a third of the overall pool. With a mudaraba, there's no physical asset at all, and I will describe three structures where each of those different underlying structures are used.